Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil markets. I'll start with Paris rapeseed. There were in the past two key patterns here. Then there looked like there might be three. But we went back to only two now. But another idea, not a pattern yet, but an idea is growing. Let's start with the two key patterns. The first and larger one is the February 2021 to July 2022 ascending broadening wedge pattern. Currently 763 to well up off the top of my daily chart, far enough that it becomes immaterial. It is highlighted on my daily chart in dark blue. This was not a perfect pattern, but it had been the main market driver higher in the early part of this year. The break lower in July left the following incredible targets on the downside. The primary target X is in the 352 even area, the harder to reach target X1 in the 217 even area. These are obviously, pretty much way out there targets that you can put in your diary on the back page and just look at them maybe once a year. The second smaller pattern was in development until the end of September, and on the surface seemed a more reasonable opportunity. It was created from the break lower of the larger pattern in June and July and is an optimized falling wedge pattern. I've highlighted the falling wedge pattern in red, bright red. The key moment here was the break upwards at the start of October. This break higher ran into a lot of headwinds in its attempts during the earlier part of October and eventually capped with a combination pattern of a key reversal down and a 3-day bearish evening star pattern right at the start of November. Now, before I start recapping the possible upside targets for this pattern, which I had previously set out, I'd like to reiterate something I said here for months now about this pattern. There is a key problem with it. It has been created in the wrong place. By that I mean it should have been formed after we'd had a prior ascending pattern, not as in this case after a great big gapping drop lower. This had previously led me to suspect that perhaps this pattern may morph further along into something else. There had been the opportunity to make an extended V-bottom, but that idea was killed off. Yet there are other opportunities which I will cover shortly. Firstly, I'd like to deal with the potential upside targets for this falling wedge pattern. Primary target X2 is in the 702 3/4 area, and a harder to reach secondary target X3 is in the 757 even area. However, the previously mentioned combination of a key reversal down on a 3-day bearish evening star pattern in early November put paid to that idea, and the targets, as I've said 5 weeks ago when the market was at its recent peak, and I quote, "My only concern is that hanging around here too long and the market may well give up the nascent bullish incentive. We start seeing disappointing longs liquidating," end of quote. Well, that seems to have happened. And I will probably retire these targets. Well, maybe I'll keep them for a little bit longer. This leaves us with some new ideas that may turn eventually into patterns. The first idea is the early July to date bearish Andrews pitchfork. The market is at the moment near to the middle time, currently at 557. You can see the times highlighted in purple. This one is early on and it may need finessing or even turning into a shallower bullish shift pitchfork, both of which I would be happy to do in a heartbeat. The second and third ideas at this time is to look at the whole action since mid-June as either a possible double bottom, which has some merit, or a bearish halfway hesitation, which also has some merit. However, the fault line with this is a big chasm, as it is way too early to speculate or to tell if this will be either of these ideas. However, I'd rather say now than keep silent on this. What we can say right now for sure is that the market has been hesitating here at the September low of 569.5 since Friday last week, unsure of what it wishes to do, so watch this space. Finally, there is the elephant in the room to address. We had a monthly key reversal down in November. Make sure you take that into your calculations or thoughts. Winnipeg canola. I've previously pointed out that during most of October, the 50% Fibonacci line of the October 2020 to April 2022 move at 863.80 had been acting as a support for what looked like an attempt higher. today is acting as resistance. I previously said back in late summer, and I quote, "It became evident since the start of the sideways to slightly lower movement we've seen here since June that there was a shallow bear channel." And that's currently 771.20 to 888.30. And it is this that had been driving the market lower during the summer. End of quote. To emphasize this point, I added, and I quote again, "So it seems that until that slightly bearish channel breaks or morphs into another pattern, it will continue to show the slightly bearish angle of attack of this market." End of quote. Well, that bear channel is still there. It's been breached on both sides, most recently in early November, but it still remains valid. The only thing I've done since last time is slightly finesse the bear channel, but it is still there. However, two things. One has already happened, and one soon to possibly happen that will impinge on this market. Firstly, it's something I gave clear warning about. We had a monthly key reversal down last month. This was lightly offset a little bit by the bullish looking outside week last week, but this longer term pattern is still worth noting and watching to see if there will be a follow through. Just remember, it is a long term pattern. Secondly, rising from bottom left to low right is the June 2020 today uptrend, currently at 798.20 and highlighted in bright red on my daily chart. The market came close to testing this back in early September, but shirked it, and indeed rose up to test the upper bull channel line on the back of that test. I'm not sure on this one, but I would suggest a close eye be kept on it. Finally, there is just the thought of what may be the whole April to date action. You see, it can be seen as a bottoming action, and it can be seen just as a shallow bear channel, or it can be seen as part of a very large bearish halfway hesitation. It's all too early on these thoughts, but I think they need to be present when things start to happen eventually. Bursa Malaysia palm oil, crude palm oil. Over September and mid-October, the market had formed a small but effective reverse head and shoulders pattern, which I'd highlighted on my daily chart. You can see that the neckline there is also in dark blue. It was a break higher over the neckline, again highlighted in dark blue, combined with the break higher over the older neckline of the September 2015 to November 2017 head and shoulders top, currently at 38.82, which is highlighted in bright red. And finally, the break above the short medium moving average, currently 39.10, that altogether caused the move up into early November. It gave potential targets on the upside of a primary target in the 42.45 area and a secondary harder to reach target X1 in the 44.40 area. In late October, prices reached the primary target and came close to target X1 as well, but finished with a bearish shooting stars pattern, type 1 bearish. However, since then, prices have dropped down to the support combination of the old neckline, the short medium moving average, most recently now, the medium moving average, currently 39.28. Now, I have considered retiring target X1 at 44.40, but I think it would also serve as an early warning for any potential new move higher, much as the combined support of the old neckline and moving averages can act as a warning on any fresh move lower. So one of these, upside or downside, is properly broken or reached, then I'm afraid it is sideways for now. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. Here comes the final bit.